Welcome to Lesson 6 of PSRM Fundamentals Overview, where we'll be discussing adjustments. And we'll be looking at different types of adjustments, a particular case called an assessment, and an important concept called debt category. Particularly, we will be adding in a manual adjustment to the system and seeing that you can set it up that it could need to have approval if the amount of adjustment is over a specific threshold. A business called Store BB, whose at the moment account is in debt for $303. We have used a tax roll quarterly calendar, and we've used the first quarter of 2014, and we have created some assessments, and we will see in fact that we have had two assessments. One of them was for 1,100, and that was on the 15th of April because that was the due date of the assessment and due date of the tax form for filing. And then we had an amendment which created a negative assessment. We're going to be looking now a little bit more detail about these assessments and adjustments. If I click on the financial transaction here, it will take me to the financial transaction screen, and it shows me information like the general ledger, both the accounts receivable and payable, and you can have multiple, we have in this case two, based upon a distribution code, and then you can download the GL to an external accounting system. The most important part of a financial transaction in some way is the effective date. That defines when this particular financial transaction becomes effective. If it's, for example, if there's no effective date, this financial transaction will have no effect on its balance. Effective date before today's date also will not have a balance. It only has a balance once it comes to today's date. And it's the date of effective date of the transaction which decides the penalties and interest which will be charged to this particular financial transaction. Now, if we have a look back to the 360-degree view, we see that we have split the adjustments, the assessments into different categories based upon something called the debt category. So we have seen that the actual assessments are under debt category tax, and the penalties and interest have their own particular debt category. Now, where does that come from? That comes from the adjustment. Let's first of all just go back to the financial transaction, and you will see that the debt category is actually shown directly on the financial transaction. But I can go to the adjustment itself, and you will see that the adjustment, before we look at that, has an adjustment type. And adjustment type defines many of the admin and configurated details of the adjustment. And one of the most important things is this debt category. This really is the thing that gets inherited to the adjustment and gives it a debt category, and it splits again, as we saw in our example, all the assessments and adjustments are split into debt category. This is going to be very important when it comes to payments and interest, penalties and interest. So penalties and interest is going to use the concept of debt category in detail. It's going to have penalties and interest are based upon, you have charges based upon the debt category, and that's why it's going to play an important part. It's also going to play an important part related to the payments, because payments will pay off the particular assessments on an obligation and other adjustments based upon the debt category priority, which we will also discuss later. And there is also a debt category priority here. We will discuss this more, though, when we talk about penalties and interest. So debt category is a very important concept. If we go back to the adjustment, we created this adjustment through the tax form, as we know. We didn't do this manually. We will actually in a moment create an adjustment manually. But I want to just clarify something which I've mentioned a few times, which might not be clear. And that is, I sometimes say assessment and I sometimes say adjustment. An assessment is basically an adjustment, but it has one special property. And that is, on the financial transaction, the unique ID, the financial ID, has the same ID value as what is called the group FTID. In other words, we group financial transactions under groups, and we group them in assessments. And as you see over here, we have related adjustments because all these adjustments are related to this assessment. And the fact that this particular adjustment has a group FTID the same as the FTID, that we name an assessment. Okay, that's how we normally talk about an assessment. If it has a header, we sometimes call it's a header. It's a group financial transaction. It's the group header. It has the same group FTID as the FTID. And if I go to if I just click on another adjustment which is associated with it, you'll see this is one of the interest financial transactions based adjustment, which are created through penalties and interest. You'll see here that the FTID is not the same as group FTID. In other words, the interest is associated with an assessment, but it isn't an assessment in its own right. Okay, so in fact, that is our definition of an assessment. An assessment is if the group FTID is the same as the FTID. And that is true also when I look back at this screen, this financial information screen, which we look at a lot. We can break down and drill down into this taxpayer from the person to the account to the tax roll, and then look at the individual assessments on this obligation. And each one of these assessments has a group header, has its group FTID equal to the ID. And underneath these particular ones, we can see in other words, I can actually look at a specific assessment and look at the breakdown by debt category. Okay, so the two important points I want to point out here are debt category. We split assessments and adjustments into debt category, important for penalties and interest, and also the fact that we have a concept of an assessment, which is when you have a group header. The header it has a header, and where the group FTID equals the FTID. So we now would like to actually create our own manual assessment or adjustment. We'll do actually an adjustment and show you how that can be done. It can be done in a couple of different ways. Again, the standard method of doing it is through a tax form, and we saw the tax form created our assessments, and that was fine. But I wanted to show you how you can actually manually in the system add an adjustment. Now, the adjustment type that I'm going to use is this one over here. It's a manual fee, okay? And we're going to see that we would like to actually, well, first of all, I'd like to point out it has its own debt category, miscellaneous fee. We'll see how that changes our debt categories in a moment. We will also add in here something called an approval profile. That will affect how who can approve this particular adjustment. So I'm actually going to create. There's a approval. We'll see how this approval works, and you'll see that what is needed for this. So what I'm going to do first of all is go to my main menu. I'm going to go to accounting. I'm going to add in again. I'm showing you how to create a manual adjustment. I'm going to pick up my store. And the obligation that we're going to create the adjustment on is the first obligation that we have on the first period, and we're going to create an adjustment type, as I said before, of the miscellaneous fee. I'm going to add a miscellaneous fee to this particular account, to this particular taxpayer, for whatever reason. Here we can define, let's say, an amount. I'm going to create $300. It's whatever. I can just fill in whatever because they paid late. Now, don't normally do this way. Normally we use penalties and interest, but I can also show you in this case how we do this manually. So when we create an adjustment, you will see that the first thing you have is its status is incomplete. I need to generate it, and generate it defines other properties. For example, all these dates, the counting date, adjustment date, and through date, which are related to how things are downloaded to the general ledger, and so on. Most important, though, is the effective date. And if one wants to look at and understand these more, you can look at the help. I'm not going to actually deal with this too much. The effective date, though, is the most important thing, because without an effective date, it doesn't have any bearing on the balance. So I'm going to change that. And here I can actually define a debt category and say which particular debt category do I want to assign this particular miscellaneous fee. Now, it has a default on the adjustment type, but you can create your own one. And here I'm going to create a miscellaneous fee, and we'll see how this affects it. Now, we can also create it as its own header, as its own assessment by giving it a header, or we can associate it with an existing assessment. And we're going to actually associate it with the main assessment, the original 1,100. So it's grouped to that, and I'm going to then just calculate, and this simply moves the adjustment to the freezable state. So you can see now it's associated with the original group FTID. If I click on that, it will go to the main adjustment 1,100, main assessment. Now, in this particular case, because I set the adjustment type to need approval, I can't approve this. I need to go through what's called submit for approval. And if I try to approve it, you will see that I'm unable to do so. It will come up with an error. Well, I can submit I can submit to approval, but I can't, and now it's freezable, and it creates a to-do. It creates a to-do that, but I cannot actually, as you see, I don't have any actions here allowing me, no buttons here, allowing me to actually to complete it, to actually freeze this adjustment. And the reason for this is because I was the one who created it. I would have to come in as a different user in order to actually do this, and I can actually, and I'm going to actually do that now. I'm going to copy the adjustment ID, I'm going to log out and come in with a different user. And I'm going to go to the adjustment that we just created. I took the adjustment ID so I can find it easily. And you'll see, because I've come in with a different user, I can actually approve it. Now, of course, I could have also gone to the to-do. Another way of doing it, I could actually go to the to-do, and I could complete the to-do. Okay, and then a batch program would actually move this adjustment to the next step. But I'm doing this manually, so I'm going to actually go back and approve it myself directly. So I'm going to approve this adjustment, and we should see that the balance should be affected, and it's gone up by 300. I've added on a new amount, and it's gone to 603. Now, if I actually go to the 360 degree into the financial information, you will see that I have a new line, miscellaneous fees for 300, and again, it's grouped under this particular assessment. Okay, meaning if I actually try to look at under a different assessment, you will see that it's not there. The only thing that it's found is is found under this one. Now in this case it's a little, even the second one here, this one, 1100, is also actually grouped under this one, as you see. And that's the reason, because it's an amendment, it's associated with it because it's an amendment, so we see it under the 1100. So the miscellaneous fee is a new adjustment, which I created manually. And this is the method that you could actually add in manual adjustments, and we saw that you can also set up the adjustment type that it needs to go through an approval process, and that means a supervisor needs to actually have rights and to approve the 300 in this example, the $300 that were added. Again, it's all a question of configuration and setting up the adjustment type to allow to need approval. The adjustment screen has quite a few different steps. If you want to do this in one go, there's also something in the system called multiple miscellaneous adjustments, where you could do multiple adjustments in one go. You can find the adjustments that are, you can find the existing adjustments and you can cancel them. You can add on a new one. Okay, in one screen, so you can even create multiple adjustments and multiple cancellations in one go. An easier method than perhaps going through the screen we saw previously, where you had to do it through many different stages. So there are different methods of adding on adjustments, but again, this is just giving an overview of how you do this manually. Most of the adjustments and assessments are created as a result of a tax form. So the important things that we've seen here are the adjustment entities. And we saw that the adjustment is associated with an obligation, and the adjustment entity always has, as we know, a transactional entity normally has its admin, and it has an adjustment type. Adjustment type is where you get your default debt category. And again, debt category is an important concept of splitting adjustments into a subcategory, and it's going to be important for penalties and interest. And every single adjustment, being a financial transaction, is related to the entity financial transaction. And we've seen that there are two different types of adjustments. There are those which are an assessment, where the group FT is the same as the FT ID. And then you have an ability to view and look at and even create other customizations to do other more interesting things of grouping and paying payments based upon assessment level. And we also have and if the group FT is not the same as the FT, then it's normally associated with another one, with a group FT of the main assessment. So, for example, the penalties and interest are related to the assessment, and the assessment is its own group header.